Support and resistance explained. How do you find better entries to your trades on all different time frames? In this video, we're going to discuss just that, an important indicator for all traders. Everybody learns about supply and demand when they're in school, and that's what's important when it comes to trading. Prices move because of supply and demand. When demand is greater than supply, prices rise. A lot of times you get into a price zone where there's an equilibrium. When you get to those prices, you can see support down low or resistance up top. Now, big money's gonna use big levels. Understanding more attention and therefore more significance will always be paid to a higher time frame. Then you understand support and resistance on those levels are going to be more important to your trading regardless of the time frame that you're using. So what is a higher time frame level? Daily charts, weekly charts. These are basing decisions off of longer term levels that might only come into play a couple of times a month or even longer than that. But when they're there, you want to pay attention. Now, the basic principle to keep in mind is simply that buyers will lift the price up until sellers offset the balance. Buying then dries up and sellers are able to then push the price back to the downside. So sometimes that higher time frame level will become so clear and prominent the more times it is tested. Now, the best part about support and resistance is it doesn't matter what type of chart you prefer, the principle is always the same, as I said, whether it's 1 minute, 3 minute, or 15 minute, or those higher time frames that we're looking at. Now, applying levels to trading is important. Most active traders tend to start with daily or weekly charts, then drop down to an hourly, like a 60-minute or even a 30-minute chart, and then you start going into your executions off your 1, 3, or 5 minutes, sometimes a 15, which I love. So here's an example on Carnival Cruise Lines that I've been looking at the last little bit. You can very clearly see every time CCL gets up to about that $11 level, it runs away from that price. So you're looking for shorts in front of that price, and then you're scalping out down towards that $10.50 and $10 level. It's been the gift that keeps on giving over and over again. So support becomes resistance. Now, this is something I love in trading. Sometimes, yes, a general rule, you can maybe say that on the higher time frame level, when a support level is broken, it can then turn into resistance. The key is there was an equilibrium at that price, which is why you look for support to turn into resistance when broken. Sometimes people like to draw a trend line, so whether you look at support and resistance levels as a horizontal line or a diagonal line, that's up to you. Make sure you back test all of your strategies, of course, but it's the same principle involved. Maybe you're finding that equilibrium in a trend upside and making higher lows all the way through. Same principles apply to this, just a little bit trickier to figure out on those charts. So the general takeaway here is that support and resistance are visible and all market participants are able to see them very plainly on your chart. So in summary, everything moves based upon supply and demand. Prices move higher, and then when they get to a point of equilibrium where there aren't more buyers than sellers, you can find a resistance level and then price can then move away from it. Identify it first on higher time frame charts, then narrow down to your trading level for the lower time frame. It can be horizontal, but it can also be diagonal, looking for those trends to the upside and drawing your trend lines for support and resistance. As always, subscribe to our free watch list daily at TraderTV.Live and check us out every single morning. The markets are open. We're there for your live trading.